Welcome to the BlackBull Markets podcast. We have a pretty exciting session today, sitting with a close associate of our company and also someone that's done very well trading in the financial markets over the last 5 years. I'm sitting with Ian Chan. Welcome, Ian.
Thank you. Thanks for having me.
Ian is one of our top providers on our copy trading platform. In addition to that, he is a pretty successful trader in FX, which is a rare feat to find. Someone's been successful over a long period of time with good sustained risk management, discipline, and it's a great success story for us, especially being a Kiwi trader, right? Or trader based in New Zealand.
Yep.
So I was keen to, I guess, hand it over to you, kind of introduce yourself a little bit and talk about your background, what you
absolutely.
you've been up to, and
For sure. Yeah. Firstly, thanks for having me. My name's Ian Chan. I'm trading under IFX Capital. You'll be able to see on the ratings.
Yep.
Trading for 8 years, I think, coming up 9. Naturally, the first few were, as with most traders' journeys, on and off, doing what I call the break-even dance. So 8 years, living in Warkworth, work, and pretty much grew up in Auckland. So, ever since then, everything else has sort of fell into place and just trucking on, really.
I mean, you look like you're 21, so I don't know.
Good question. So I am I've just turned 28.
Okay.
Not too long ago. Married 6 years, and originally from Malaysia. Moved here in 2003.
Amazing.
Don't really remember too much of Malaysia, but
started pretty young.
Roots. Started pretty young.
Nice.
Sure.
Oh, amazing. I think out of interest, like, what got you into trading at the beginning? What was the main attraction for you?
Cars. Interestingly, so basically, me and my brothers, we've always been petrol heads. And naturally, as a kid coming out of high school, in high school, you spend your time on YouTube and watching all these videos of these cars. And I think what stuck out to me and my brother was this particular one. It was 2008 bright green Lamborghini Gallardo, but the guy had just completely ripped it apart, stuck 2 big turbos on it. I'm like, okay, what does this guy do? And then basically, I kind of grew up with sort of approach of, hey, if you see something you like and you take value from, try to replicate that, because if you do what you take on their habits, chances are you're going to get to where they're going to get. Naturally, you got to be picky about what you want to replicate, right? It's got to align to your value. So long story short, he was actually in software development, and then the partner and his circle, there's a couple of guys there in the Forex world. So followed them, and that's pretty much what kicked off the first strategy that I was, testing out. And then, one thing led to another. A few strategies, feeling them out, see what works for you, and got to a point where I've got to a strategy that works. So.
Because you've come to a point of, like, what I call the golden rules in trading, which are kind of a few things: sticking to a few assets to trade. Not trading, not over trading, having strict risk management built into your strategy. So it's almost you've come to a point where you were testing those initial strategies and you've found one that works, and essentially it fits with what I see as the golden rules, because on our side as a broker, we see thousands and thousands of strategies across from clients around the world, and generally the ones that do work are the ones that fit those rules. And when I say work, I don't mean, hey, turn $1,000 into $500,000 in a week. It's really not about that. I think once traders understand that it's about achieving long-term
absolutely
gains and looking for a few percent alpha a month and trying to replicate that month on month on month. That's really where your sweet spot is for trading.
Absolutely. And also it's understanding the cycle as well. Like, it's not always perfect. Not every month is going to be green.
Exactly.
And it's understanding, hey, if it's a down month or if it's a couple of down months, that's all good. Like, if you've tested your strategy, just have faith in that and just let it run its cycle.
Going back to the initial strategies that you formed, I mean, how did you get started in terms of what strategies were you using? What things were you looking for? What mistakes did you make?
So I think it started with I've never really delved too far away from price action, and never looked at macros. It was always technical analysis, but I quite quickly went down a rabbit hole of slapping on indicators, looking at multiple time frames, and I got to a certain point where I was like, cool, top-down approach, right? And it works. But one of the key things I struggled with was, by the time I had formed a trade idea, I was like, cool, I've got 4 points of confidence going long and then another 4 going short. I'm like, I've gone, the 1 hour is telling me one thing, the daily is telling me another thing. And then I've got MACD divergence going opposite directions, and you've got EMAs everywhere, and it's just,
So when you say top down, you mean looking at higher time frames, getting confirmation, and then...
That's right. So it worked, and that it certainly, it still helps me build the trade idea now. But also I think it's understanding how to, like, back then it was, I wasn't taking each time frame with a grain of salt. I was sort of saying, cool, that's doing, the daily is doing XYZ. That must mean the 1 hours should be doing it, XYZ as well, but it doesn't work that way. The first few strategies was just feeling that out and understanding there's a lot more depth in the analysis.
See, this is as well like a great example of how automation through expert advisors can't get to a stage of that level of decision making, if that makes sense. You can put in all the parameters that you like, but in terms of the actual conscious decision to place a trade, even though you might have rules matching, differentiates from the effectiveness of even having the human touch behind the strategy and a full AI running on the strategy.
Correct.
And you run from a discretionary point of view, which means you run by managing your own trades, right?
Correct.
What was the reason, I guess, that you didn't, or do you use it, EAs, AIs, or?
No, not at the moment. It is something obviously we've been talking about, AI and ChatGPT earlier. But it's certainly something that's on the radar. But right now, I've got a system that works, and I have been to the cycle of implementing a new concept without actually fully testing it. And I think that can be dangerous. So I think same approach applies to EAs, AI and implementing that and seeing how that all fits in. I want to be able to test it first. But it is on the horizon for sure to look into.
Ultimately, I think the more AI develops its consciousness, that's where you might find an interesting space for trading in general and how it can capture profitability through market moves, if not already, right? I mean, you've got EAs that are designed based on certain strategies. You have signals and indicators, which are based upon, say, certain automations, but in getting to a place where it recognizes actual market moves or predicts that to a very high probability, that's when it could get pretty scary, especially for banks and market makers.
For sure. And when they form their own idea off the back of that as well.
So in terms of indicators or signals, I mean, do you use what are the main indicators that you use to identify trade decisions?
Great question. might surprise some. I actually don't use any indicators at all.
Okay.
I use, actually no, I lie. There's, you can't really call it an indicator.
Yeah.
It's because it's price action, right? Purely look at, I suppose we'll go into it soon. Just on the 1 hour chart.
Right.
And I've got key levels and key structures that I look for, and the key thing here is seeing how price breaks various levels, and the keyword there is how, not specifically if it breaks or it doesn't, but how it breaks. That tells me, what side momentum is going. I use alerts a lot, so that way, if for any reason I'm not, at the charts, it tells me when a key level's been reached.
And they were like mobile alerts.
Yeah. To the point where sometimes it's waking the wife up at 3 in the morning. Turn that off.
Yeah.
But
I'm gonna place a trade. Hold up.
Exactly.
Yeah.
Exactly.
I mean, that I guess is extremely interesting in terms of looking at levels. Personally, as well, I think having a clean chart is so important, and just being able to identify key support resistance areas.
Yeah.
And how the market, like you say, reacts after breaking those. So a lot of looking at how candles move, I guess that's a lot to do with your strategy, right? Because price action essentially is trying to read the candles.
Yeah, 100%. And like I think I mentioned before as well, is I've been down the road of having layers of indicators to the point where they start contradicting each other. So yeah, I love having a clean chart now.
It's like the bell curve you mentioned earlier. It's like always coming back to square one, right?
Yeah.
Simplicity.
Yeah, for sure. I mean, look, it doesn't work for everyone. Everyone's got their own personality and approach that works for them. For me, got a day job as well, so I need simplicity. I need something that it's got a robust system that I can work with. That doesn't. It's not going to impede on each other. It needs to work collectively with life.
Exactly.
So.
Can you talk a bit about the assets that you focus on, kind of why you focused on them?
So yes, so Forex only trade 6 pairs. So that's the Euro US dollar, the Pound US dollar, the Aussie US dollar, and 3 yen pairs. So that's the Euro yen, Aussie yen, and the Kiwi yen.
Interesting.
Still, I'm refining the Kiwi yen a little bit more, but yeah, those are the main 6.
Nice. Why did you choose those out of interest? Is it mainly for like adhering to those price action rules that you have?
Yeah, precisely. Firstly, well, 2 key things is these are the pairs that I've tested, and I could trade the Swiss or some of the other exotic pairs, but fundamentally they're just, for this particular strategy, they're a little bit too. The others are a little bit too volatile, and spreads is the other thing. Like my typical stop loss is about 12 to 15 pips.
Right.
So they're pretty tight.
Okay.
Not scalping level, but they're tight enough to the point where if the spread goes up to 5 or 8 pips, like you're
covered.
Yeah.
It's interesting you mentioned that. I want to get into a bit more about your risk management, because I think that's a lot of what people who potentially will be copying your strategy will be interested in terms of how do you risk manage, and then we'll get into how they can, of course, add another layer to that. But generally, your strategy premise is based around strict risk management, and I think again that's why it's so impactful. But do you want to?
Yeah, absolutely.
Talk about that.
So, actually, I've had this rule put in place from the very beginning. So I'm very fortunate that I picked up a strategy at the start that was, had the. For me, you mentioned golden rules before.
Yeah.
That's always stuck to me from the very beginning. So the key one there is 1% position size risk. So essentially, for those who don't know, I don't risk any more than 1% of the total account size or the fund size on each position. And that's where my stop loss is. And as price moves, I look for, again, I mentioned for the strategy, key levels to be broken or patterns to present themselves, and the soonest opportunity I get, or that I see for those to present themselves, that's where I start trailing my stop loss manually. And at that point, basically, I'm, at the earliest instance, covering the downside,
Right.
But still leaving enough room for it to really move with momentum.
And I guess that process helps you to lock in a certain amount of profits, right?
Yeah,
And
correct.
So
And
it's always constantly dynamically risk managed.
yeah, absolutely.
Yeah.
And that's where the strategy allowed me to get into some, like, it's pretty, it's not uncommon to see a trade rally into the double digit percentage marks. And look, it's a balance point though, right?
Yeah.
It's covering the downside, locking in profit, but also not locking in too much that you're choking yourself out of the trade, because you want some breathing room for the market to do its thing. So yeah, there is that balance point.
We haven't even touched on the profitability yet. Like the focus always, I guess, when you're looking at following a strategy is to see what their risk parameters are
Absolutely.
like. And then, I mean, of course, your results speak for themselves. And I think that's testament to having that risk management structure. So, I mean,
and
sorry,
I suppose while we're on that is on risk management, right, is understanding, what your appetite of risk is as well. I suppose your next question is probably going to the numbers, right?
Yeah,
Possibly.
exactly. Yeah, I mean, that's why you're so highly rated on the platform. As the rating actually takes into account the age of the strategy, which of course you've been trading for many years before you're building a track record with us. But one way for people to verify it is that, hey, look, you can see that it's been listed for over 250 days. That's when the strategy started. Go and backtrack historical performance as well and see the bar charts for monthly gains and quarterly gains. So I guess you want to talk a bit about how that's been going.
Absolutely. So from memory, I had a look last night. I think under BlackBull, it's 41%.
Fantastic.
In that period. Personally, for 2022, landed at 51%, and then 2021 was 74%.
Wow.
Yeah. 2020 was 34%, but I can't quite. Well, I'm still consolidating that all that data. So
anyone,
that one.
Sorry to interrupt, but anyone listening to that needs to bear in mind those figures are mentioned with having a 1% risk managed. Discipline, like, throughout all of that, which is incredible. And I think that's why we're so excited to kind of share your story and your success story. And I think it's especially for new traders who are looking to aspire to get to where you've come to in your trading career. I guess is understanding that you don't need to overcomplicate it.
Absolutely. I think that's totally right. Like, you've got to find the strategy that works for you. There is, as much as I of course I'm biased, right? I like my strategy. It works. But naturally, there is no perfect strategy. I do see some strategies out there where the numbers are bigger. Yeah, for sure. But they're also a lot more volatile.
That's right.
And there's a lot more risk on the table. So it's finding that balance point. Naturally, more risk, more reward, right?
And in terms of, say, the profile of anyone looking to follow you, right? Of course, within the Copy Trader platform, it allows for any profile type in terms of your experience levels. If you're just getting started, you can follow the strategy with strict parameters. If you're a sophisticated trader, you can really kind of dig deep into the statistics and understand the logic behind the risk management and auto scale or allocate accordingly in your portfolio. But in terms of, say, entry points, equity wise, what would you say is the minimum required to start copying your strategy in order to kind of replicate those gains and the risk management side?
I'd say 5k is a good start. 5k is a good start. Naturally, as the fund grows, you kind of want to grow along with that as well. So, 5k is a good starting point.
And in terms of, ideally, if you're looking to invest in a strategy like this, it's not something that you're looking for short-term gain.
No.
It's really with a decision that you've made to look for, this is something that you're looking for an annualized gain for, right?
Absolutely. Yeah. And I think part of the reason why I really like the strategy is that we've kind of developed is it's scalable, and it will last. So I plan to be doing this in the years to come, as it grows to multi figures,
again,
8-9 figures, right? It's that's the goal.
Sorry. Yeah.
So yeah.
And the reason that is because it's been tested over all these different market cycles that we've had. I mean, it's survived 2011, 2012 volatility, which was huge, like the volatility during COVID.
Yeah.
Which is testament to the gains that you made in that year or those years.
Yeah.
On FX.
Yeah.
It's pretty incredible.
And on that is probably the comes down to the specific pairs that I trade. And I suppose for those looking to try out new things as well, it's key not to go too far out from away from that boat, right?
Yeah.
You want to make sure you're testing a few things first and trading that, as opposed to me thinking, oh look, the market's doing this, let's just trade some exotic pair.
Exactly.
Yeah.
I mean, just going back to those golden rules, I mean, fitting in with that 1% risk, it's almost like, I always talk about it, but it's 5 trades. Say you have 5 trades in a week. Even if you've hit your stop loss on 3 of those, you've only, you've got 2 take profits, or you've let those 2 trades run and they're in some sort of profit. If you're running with say even a 2-to-1 risk to reward ratio, you're still making money.
Yep.
It's what a lot of traders need to understand, is that stop loss and that risk management tool is designed for you to be profitable if you're consistent with it.
100%.
And if your strategy works, it's like focusing on those numbers primarily. Coupled with your price action strategy essentially is.
And you can actually see that on the graphs. On the profile. Is right now you'll see that I'm in drawdown, but you'll also see a bit of a trend where there's a few months of break even or negative months, and then there's a couple of big months.
Yeah.
And that's just the nature of the strategy. So probably should have said this from the start. It's the whole idea is, yes, low risk. The strike rate in terms of your win rate is also fairly low, but the wins are significantly bigger than your average losses, which are 1%.
Yeah, I think if you go into the IFX Capital profile, you can see all of those statistics. You can see the best trade, the worst trade, and the best trade is far succeeding.
Yeah.
I think it's definitely almost 5 figures.
Yeah.
And the worst trade is like a few $100 basically.
Yeah.
So essentially that's the premise of it, and that's the beauty of the strategy.
Yeah, for sure. And also, again, to go a little bit deeper into that, right? It's understanding what your typical drawdown period is, or what some might call time underwater, right? So, what sort of how long do you expect to be in the losses or in the red before the next win comes, and just having that parameter set. So like for me personally, 12 to 15%, right? That's the threshold of a maximum drawdown period. Anything beyond that, then we'll look at refining a little bit more. But that's where that's an extreme. And
again, the beauty of the Copy Trader platform, as a subscriber, they can actually choose to have an equity stop out limit. So based on their own risk comfort levels, it's like, hey, okay, I'm going to follow Ian. I'm going to follow him 1-for-1, but hey, I've got 10 grand in my account, but I don't really want to lose more than, say, 20%.
Yeah.
So I'll put an 8K equity stop out level on there. So
Absolutely.
kind of that covers them from that perspective. In addition to that, though, like they'll be in it with you at the same time. It's like almost like, you place a trade, copies on their account, but if they're not happy, or they foresee that it's over risking, or it's not fitting what they want, they can always close out the trade as well.
Yeah, and also you've got the ability with your system, right, to have the multiplier set.
Exactly.
Right. So if you have, if you've got a same size account 1-to-1, but you're thinking, oh, maybe we'll just dip our toes in.
Yeah.
Right?
Yeah.
So half the position size to reduce your risk. So
Exactly.
instead of risking 1%, you risk 0.5%. Right. That's a lot more conservative.
I think for beginner traders looking to, we speak with a lot of traders who are learning and on the demo accounts, and it's that confidence to just get into the live environment, because that's when your whole psyche about trading changes. When you're actually trading with actual real money, you have that whole attachment to your money. But this is kind of that step in between where you're not so attached to the money, because you're not actually placing the trades, but in actual fact you are getting trades placed on your account, and you're still somewhat able to manage it through the settings, through the copy trader, through your risk parameters, adjusting the multiplier, things like that. I think that's a nice way for people to just get started as well.
That's a great way to put it, actually, because it's trading is 80 or 90% psychology, right? So it's a good way to exercise that a little bit, right? Have the trades placed for you, and just as you watch it fluctuate and do its thing, you'll really start to feel, oh, this is what it's like to be in a winning trade. Oh, this is what it's like to be in a losing streak. And just really get comfortable with that whole space. And
building good habits, like those habits of placing stop losses, ensuring that there's a disciplined approach to trading. You're not over trading. They're going to see that hey, Ian's only trading like a couple of times a week, if that. It's like, you're only looking to trade when there's a market opportunity. It's not like, hey, I'm on my charts now, I want to place a trade. And that impulse trading is what leads people down a really nasty path. And I suppose to add to that as well is, so I mentioned before, 6 pairs only trade on the 1 hour chart. So I'm basically checking the close of each hour candle of every waking hour almost, or I have my alarm alert set. So sometimes even a 3 a.m. alert will go off, right? But I'm doing all that, but I'd probably average about 8 to 12 trades a month, which is not a lot, and in respect to how much time we're, or how frequently we're checking the markets. If you are interested in following Ian Chan, IFX Capital Limited, if you're a client of BlackBull Markets, under the Trading Tools tab, you've got copy trading. And in copy trading, there's a ratings item. So you sign up to be a subscriber, and you essentially see Ian as number 1, number 2 ranked trader provider on the platform. And you just simply hit copy and then set your parameters. There's a whole video about how to do that. We can also link that to the description below. And if you, enjoyed this podcast, and I definitely enjoyed talking to you.
Yeah, likewise.
Appreciate you coming on.
Thanks for having me.
And we're I think in terms of the direction for copy trading, this is, if you are to copy trade or allocate a portion of your whole portfolio, it's without giving too much advice, it's probably one of the nicest places to be in terms of getting exposure to that type of strategy.
For sure.
I appreciate it, Ian.
Cool. Yeah, thanks, Anish.
Thanks for being here.
Yeah, it's awesome. Always good to be here.
We can go get a coffee, I think, now.
Yeah, sounds good.
Thanks for everyone for listening. Hope you stay tuned to more of our podcasts, and maybe we'll have Ian back in a couple of months when a lot of you guys are following.
Sure.
All right.
And we're talking about some big wins.
Exactly. Take care.
Nice.
See ya.
Thanks, guys.
Bye.